Hello, financial adventurers. Welcome to our second lesson in the course, Practical Guide to Cryptocurrency Investments. Today, we're embarking on a journey through time to understand the history of money, from the earliest forms of exchange to the digital revolution of cryptocurrencies. Get ready to discover how money evolved over the centuries, the challenges faced at each stage, and how Bitcoin and cryptocurrencies emerged as an innovative response to the problems of the traditional financial system. Let's start at the beginning of civilization, a time when money didn't even exist yet. Back then, people exchanged goods and services directly in what we call the barter system. Imagine this. You had a sack of wheat and wanted to trade it for a pair of sandals, or maybe you had a cow and wanted to trade it for a horse. Barter worked for small communities with basic needs, but brought many issues. It was challenging to find someone who had exactly what you needed and who wanted what you had to offer. Plus, the value of goods was very subjective, varying based on each person's needs. Over time, humanity realized the need for a more efficient and universal medium of exchange, and that's when metal coins made of gold, silver, and other valuable metals appeared. These coins greatly facilitated trade because they were durable, scarce, and widely accepted. Accumulating wealth became more practical. However, there were still challenges. Every transaction required weighing and verifying the purity of the metal. Imagine the hassle. Eventually, paper money emerged, a true revolution. Much lighter and easier to carry than metal coins, paper money made trade easier and allowed large sums of money to be created. But it introduced a new concept. Paper money has no inherent value. It depends on people's trust in the government that issues it. This trust is essential for paper money to work and be accepted as a means of payment. Later, with technological advancements, money became increasingly digital. Credit cards, bank transfers, and online payments became common, bringing a lot of convenience and speed to financial transactions. However, even digital, money still depends on intermediaries like banks and other financial institutions that charge fees and often impose restrictions. Additionally, its issuance remains controlled by governments and central banks. Despite all this evolution, the traditional financial system still faces significant challenges. For example, inflation, which occurs when the issuance of fiat money is out of control, reduces purchasing power and harms the value of savings and investments. Another challenge is government control. Governments and central banks have the power to manipulate money supply and interest rates, which can unpredictably impact the economy. We also face the issue of intermediaries, as most transactions still depend on banks and other institutions that charge fees and impose restrictions, limiting user freedom. Lastly, there's financial exclusion. Millions of people worldwide still don't have access to basic banking services, which prevents them from participating in the economy and building a secure financial future. It was amidst these challenges that, in 2008, at the height of the global financial crisis, Bitcoin, the first cryptocurrency, emerged. Bitcoin was created by a person or group using the pseudonym Satoshi Nakamoto, and it brought a revolutionary proposal: a decentralized monetary system based on blockchain technology. This introduced some very interesting characteristics. Bitcoin is decentralized. It's not controlled by any government or institution, but rather managed by a global network of computers. This means no one can manipulate the issuance of Bitcoins or censor transactions. Furthermore, encryption ensures the security of transactions and the integrity of the network, making it resistant to fraud and cyber attacks. And to complete the picture, all transactions are recorded on the blockchain, which is a public and immutable ledger, allowing anyone to verify the authenticity of these transactions. The emergence of Bitcoin and cryptocurrencies opened a new chapter in the history of money, with the potential to transform how we handle finances. First, it allows people to have greater control over their finances, as they don't rely on intermediaries to make transactions. Cryptocurrencies enable fast, global transactions. You can send and receive money anywhere in the world quickly and at low fees, without facing the barriers and bureaucracy of the traditional system. Cryptocurrencies also promote financial inclusion, as they're accessible to anyone with a smartphone and internet connection, offering financial services to millions of people who were previously excluded from the system. And, of course, The cryptocurrency market brings new investment opportunities, allowing investors to diversify their portfolios and seek new financial returns. The history of money is a story of constant innovation and adaptation to meet society's needs. Today, cryptocurrencies represent a new chapter in this story, with the potential to democratize access to financial services, empower individuals, and create a more transparent and secure system. Understanding this evolution is essential for those who want to prepare for the future of finance and seize the opportunities that the world of cryptocurrencies offers. Did you enjoy the content? Then, take the opportunity to delve even deeper. Sign up for our complete course, Practical Guide to Cryptocurrency Investments, from Zero to Confidence in the Digital Market. It's free, and the link is in the description. And don't forget to leave a like and subscribe to the channel to keep up with all the updates. See you in the next lesson.